It's that time of the year again to discuss a Santa Claus rally. Are we getting the Santa Claus rally this year? Could it be larger than other years? When is the Santa Claus rally? What is the historical performance of the Santa Claus rally? And really, why is there such thing as a Santa Claus rally? We will go over all of that and what I expect from Tesla stock in this Santa Claus rally. Tom Lee with Fundstrat thinks this Santa Claus rally this year could cause stocks to hit new all-time highs on the index level. Now, if the indexes hit all-time highs, a stock like Tesla could do exceptionally well. But we have a lot to get into in this video in a short amount of time, so let's go ahead and jump into it. First things first, with what in the world is a Santa Claus rally? According to Investopedia, the Santa Claus rally is the tendency for the stock market to increase during the Christmas season. Theories for the rally include increased holiday shopping, seasonal spirit, and institutional investors settling their books before going on vacation. Like many market anomalies, the Santa Claus rally may be random with no future guarantees. Yale Hirsch, the founder of the Stock Traders Almanac, coined the Santa Claus rally in 1972. He defined the time frame of the final 5 trading days of the year and the first 2 trading days of the following year as the dates of the rally. These 7 days have historically shown higher stock prices 79.2% of the time, reflected in the S&P 500. The Stock Traders Almanac compiled data during the 70 years between 1950 and 2020 and showed that a Santa Claus rally occurred 57 times, with growth in the S&P 500 by 1.5%. Even the last Santa Claus rally period, in December of 2022, the last 5 days of December and the first 2 days of January of 2023, the S&P 500 rose 0.8%. So even during last year, when stocks were coming off of lows, when not a lot of people were bullish in markets, you still had a Santa Claus rally during that period. Now, here's where things get a little bit interesting, because normal theory is the Santa Claus rally is just the last 5 days of December, the first 2 days of a new trading year, 7 days total for this rally. But recently, in more recent times, the Santa Claus rally has been getting pulled forward. So now the Santa Claus rally period is really after Thanksgiving until the first week of January. So the period has gotten larger here, with a majority of the recent year's gains, the last 10 years or so, happening in the second half of December. So you're theoretically already in a Santa Claus rally, and this could already be affecting the markets in a positive way, especially what we've seen on Friday with the massive outperformance of the Russell 2000, as well as the broader indexes did well, but really the Russell 2000 did spectacular on Friday. I think that is important this year specifically. This article from Barron says the stock market had a wonderful Thanksgiving. Now it's time to celebrate Christmas. It says there's more to a potential rally than purely technical matters. Jessica Rabe, co-founder of DataTrek Research, points to the end of the Federal Reserve's tightening cycle. The central bank's last raised interest rates in July, and the market is coming around to the idea that it was the last increase of this rate hiking campaign. This article goes on to point out a rate cut could be problematic if the Fed were acting to stave off a recession. But the good news is that the US economy looks to be in solid shape. The November S&P Global Flash US Composite PMI, a gauge of economic activity in the manufacturing and services sector, came in at 50.7. Anything above 50 means economic activity is increasing, evidence that economic growth is in a sweet spot while inflation continues to fall. That's a very important aspect of this whole equation. As we are done with the rate hike cycle from the Fed, as long as we don't get any outsized crazy inflation that comes out of nowhere, which looks highly unlikely, the Fed is done raising rates. Now, Two reasons the Fed cuts rates from this point on. Number one, the economy is slowing. We're heading into a recession. I think personally there's a greater chance we get 10 rate cuts. We get rates back down to, half of 1% before we go into recession in 2024. Why? Because you could make the argument that the Fed is separate from the government, but the Fed is very influenced by the government. They set their standards for the Fed. The government does that. So if you are running for re-election and we go into a recession before the election, you are in a very, very bad position. Like, you've never won an election if you are an incumbent president running for re-election during a recession. It's never happened before. Your odds of getting reelected are literally zero if you're in a recession. So I don't think that's coming in 2024. That's my personal opinion on it. I think that's a bigger problem potentially for 2025. The second reason the Fed cuts rates is because inflation continues to fall. You don't need to have a Fed funds rate at 5.5%. So you can start to cut rates. Now, markets are expecting rate cuts as soon as March. And that's why this Santa Claus rally could be so much bigger and better than what we have seen in years prior. We've had a drag on our markets for 2 years now, and that was the Fed raising rates. Every time they raised rates, it made stock valuations a lot less attractive. Every single time. Now, this will be a benefit to stocks as rates go lower, as long as we avoid a recession, which looks like what is currently happening. Now, we're actually now expecting the first rate cut March 20th of 2024. There's a 55.1% chance of a rate cut. There's a 36.2% chance of the Fed continuing to pause. And what just happened on Friday? Fed Jerome Powell gave us a speech, a question Q&A type speech. So he was asked questions. He was very dovish. He did not push back on cutting rates in March. He could have said there is absolutely no way we are cutting rates in March. He didn't say that. Nothing even close to that. We are pricing in 5 rate cuts by the end of 2024. The probability is 30.5%. As you can see here, it's the highest probability is 5 rate cuts for 2024. Neck and neck is 6 rate cuts for 2024. And that's 29.9% odds. That would be, I believe, a rate cut at every Fed meeting by March. 1, 2, 3, 4, 5, 6. So if we get 6 rate cuts, that would be a rate cut at every meeting besides 1. If we get 5 rate cuts in 2024, that would be a rate cut at every Fed meeting after March besides 2. So that's a lot of rate cuts and a lot of easing of valuations in markets and pressure on stocks that are interest rate sensitive. A Tesla perfectly fits that bill, if you will. Tesla's very interest rate sensitive. Tesla's very much a growing business. Their customers depend on interest rates to buy Teslas. Tesla is investing. Tesla will benefit from lower rates merely just solely based on their investments. They can go to the bond market and raise capital very cheap if rates are lower. Well, when rates are high like they are now, it puts a lot of things on the back burner, even like Giga Mexico, as we have heard recently. So the estimated US recession probability for the next 12 months, according to the yield curve, is 61%. So the yield curve is saying we're heading into recession in 2024. Economists are at 48%. So if you look at economists, we're not going into recession within the next 12 months. Consumers are at 69%, just showing you how bad some, consumers are doing out there. They're not doing great. Goldman Sachs has the odds of a US recession in the next 12 months at 15%. Now, I'm not going to sit here and say these are accurate numbers. You can make your own assessment. But they're worth noting that meanwhile we're expecting all of these rate cuts, it's not because the economy is expected to be really bad in 2024. Quite the opposite. That makes stocks very attractive. Now, what we have seen for 2022 and 2023 is a record low allocation to stocks. It's never been this bad. Even during the great financial crisis, you've always seen a higher percentage of money managers of investable capital in stocks than where we are right now. I think 80% of funds, or some crazy number, are underweight stocks right now. And like 80% of funds are overweight bonds right now. It's ridiculous. Now, as rates go lower, again, that should flip where stocks become more allocated than bonds. This is going to drive a lot of money into the markets. Now, think about this logically. If rates are going down and you're underallocated in stocks, markets are forward looking, so they price things in ahead of time. You probably want to get allocated into stocks before you're in 2024. So I think you're going to start seeing a lot of capital flowing back into markets. But it's not going to flow into the markets equally. The indexes, basically meaning your big tech names, are probably not going to do as well as interest rate sensitive companies. So if you are a savvy investor, you don't want to be buying a Microsoft or an Apple or an Nvidia or a Google or an Amazon. You want to be buying interest rate sensitive names. You want to be buying a Tesla. You want to be buying quality small mid-cap companies. Those have been the stocks that are outperforming. You've seen it on Friday. The Russell was up over 2.5%. The NASDAQ was up 1/3%. NASDAQ stocks still did well. Some stocks did really well. But your average big tech stock did not do well as well because there's no reason to own those in 2024. Unless you're in it for safety, if a recession becomes more likely, then those stocks will start to outperform. But right now, it's all about interest rate sensitive. And I think specifically if you are a Tesla stock investor, that means we could see quite a large Santa Claus rally. As I said before, I think Tesla stock could be $300 or more by the start of the new year. I think Tesla is in a prime position for a massive rally, not just a small rally, but a massive rally. Hedge funds, institutions are underallocated to Tesla as is. They're underallocated to stocks as is. Interest rates are falling or projected to fall 5 or 6 cuts worth in 2024. The economy is holding up. There's massive catalysts that are coming. The Cybertruck was just priced higher than expectations. Licensing of FSD is a possibility in 2024. FSD is heading to China in December or January of 2024. When rates fall, Tesla will be able to raise prices and keep monthly payments the same if they choose to. That's going to be directly accretive to margins. That's going to be accretive to Tesla earnings. That's going to mean Tesla is probably going to blow away the expectations for 2024 numbers. If I can sit here and say that, I think some hedge funds and institutions can figure that out as well. I don't think I'm a genius. I don't think I'm speculating here. I think this is all factual information that I'm saying. Very easily understandable information. But not all hedge funds and institutions understand. That's why there is a record amount of short positions in Tesla. That's why Tesla is the most shorted stock on our markets. And that's another reason why Tesla could actually outperform as well during the month of December and the first week or two in January. This is the last time you would want to be short in Tesla. There is $21 billion worth of short positions in Tesla. That is about 3% of the entire short position on our markets in the exact stock you don't want to be shorted for 2024. The Cybertruck delivery event, you could say that was just a buy the rumor, sell the news event as well. That if that was truly a negative catalyst for Tesla, if that was truly a negative, Tesla would have been down a lot more than 0.5% on Friday. That's like a neutral day for Tesla. That's like any normal, just nothing happens kind of day for Tesla. Tesla's down 0.5%, no big deal. Tesla was up 0.22% in after hours, almost going green. That is really unprecedented after major events for Tesla, for any other really big tech company out there. Normally, you get a buy the rumor, sell the news event. So I do think the Cybertruck delivery event itself is a positive catalyst that will affect Tesla in the weeks to come. Now, we do have some catalysts as well that are to come that will be important, that will help dictate whether or not we get a small or a large Santa Claus rally. Tom Lee with Funstrat. I'm sure you guys know who Tom Lee is. If you don't, then you haven't been in the markets long enough to understand half of what I'm saying in this video, so this is probably not going to mean much to you anyways. But a vast majority, probably 99% of you guys watching this video or more, are going to know who Tom Lee is. He was literally screaming on the top of the roof to buy tech stocks when they crashed at the end of 2022. And he was really the only one doing so. That was proven obviously very correct. Now, Tom Lee says, looking at the past week, that was a day of reckoning for anchored bears. Bearish anchors. The Fed would hammer at stocks, rates would reverse higher, stocks extended and are overbought. The Fed on Friday did the last thing besides hammer at stocks. The Fed basically confirmed the markets are okay to rally. 5-6 rate cuts in 2024 is probably appropriate. That's basically what Fed Jerome Powell confirmed on Friday. Rates would reverse higher. That did not happen. Rates continue to fall. 10-year Treasury yields on Friday were down about 14 basis points. The exact opposite. Stocks were extended and overbought. I think in the grand scope of what we're dealing with for 2024, the odds of a recession being very low, relatively speaking, considering we've seen so many rate hikes, and just the rate cut expectations being 5 or 6 rate cuts, I think the rally we've seen is probably small compared to what we should be seeing right now. Just my opinion. He says instead, small caps had a face ripper rally on Friday. Our evidence-based research suggests this zig up was coming post-October. Now, this post says Funstrat. As we look towards markets into year-end, we see a zigzag, but ultimately a rally towards S&P 500, 4750 to 4800. We are a dip buyer in December's zigzag. So if you blow this picture up a little bit, basically there's 3 catalysts to come. We just got October PCE. Those were good numbers. Funstrat expects markets could fall into the December 8th, November jobs report. Now, the 8th is going to be on Friday. Tom Lee with Funstrat expects you could see a bobbing action from December 8th through December 12th. December 12th is when you will get November's CPI report. Now, December 12th is Tuesday, not next week, but the following week. And then the next day, Wednesday, is the December FOMC meeting. And that's when they're actually expecting a FOMO rally mixed with the Santa Claus rally for stocks. And I think that does make sense as long as the jobs report doesn't come in too hot or too bad. November CPI is likely to be really low. And the Fed, well, they already had their chance to bat down markets. I'm sure we're going to get something that is in alignment with what Powell said on Friday. For your jobs report coming next Friday on December 8th, you're expecting 170,000 job ads. Last month, you were at about 150. As long as this comes in 120 or higher, I think that's good news. I think that's just below trend. The historical trend is around 160,000 job ads every month. You come in at 120, that's not showing a, terrible economy, right? You still added 120,000 jobs, but that really shows you're probably not going to continue to see that upward inflationary pressure in wages or in just the economy itself in spending data. For your inflation data that comes out Tuesday, December 12th, Core inflation month over month is expected at 0.2%. That would be the same as last month. Core inflation year over year expected at 4%. That would be the same as last month. Inflation month over month on the headline is expected, some people think, at 0.1% or negative 0.1%. The last reading we got was 0%. So some people are a little bit higher, some people are in deflationary territory. Inflation rate year over year is expected at 3.1%. Good news here is expectations are not high, right? They're not super low at the same time. You're basically expecting unchanged numbers from the last report, besides maybe a tick higher on month over month or a tick lower on month over month headline. This should be a Goldilocks-like scenario, because we're probably going to come in lower than these estimates. It wouldn't surprise me if core comes in at 0.1. It wouldn't surprise me if year over year comes in at 3.8% or somewhere along those lines. Wouldn't surprise me if month over month is actually in deflationary territory based on some of the earnings calls we have heard from CEOs of retailers like Walmart, specifically saying deflation is coming in the months ahead. Don't be surprised if we do head into a little bit of deflation. Deflation's not great, but considering prices are already so high, just in the past couple of years, they've went dramatically higher. It's probably not going to be seen as all too bad. So from my perspective, it fundamentally makes sense why this Santa Claus rally could be much larger than what we have seen during rallies of the past. Now, if Tesla stock gets above around 260, then you open that door for a large move to about $300 per share. That would be breaking long-term downtrending levels of resistance around 260, and that likely sets you up for a big rally. That's the level I really want to see Tesla break above, but your 100-day moving average is at $245.27. That's also going to be a big level to break to the upside that could send us to 260. 260 could send us upwards to $300 per share. And I think $300 plus is where Tesla should be already. I don't really understand why Tesla is at 239. I think Tesla is very misunderstood, and I think people are on the wrong side of this trade. When you look at the short positions, when you look at the negative sentiment or under allocation of Tesla, this is the last stock you would want to be under allocated in next year when rates are expected to be cut 5 to 6 times. Just my personal opinion. Let me know what you guys think down below in the comment section. Is a Santa Claus rally coming or a Santa Claus crash coming to markets? Are we getting coal or are we getting presents? Let me know down below in the comment section. If you guys want to come join the trading community, link down below in the description of this video. Hit the like button and subscribe to the channel if you guys have not done so already. Thank you for watching. Enjoy the rest of your day, night, and I will see you in the next one.